Every recession feels like the end of the world. Jobs vanish, markets crash, businesses close, and fear spreads faster than any virus. But here's the shocking truth. While millions panic and lose everything, a small minority quietly become richer than ever before. How? Because they don't just see the problem, they know the solution. In 2008, when people were running from the stock market, Warren Buffett was buying companies at a discount. In 2020, when panic shut the world down, investors who stayed calm doubled their wealth within months. The secret isn't avoiding the recession, it's learning how to use it. And in today's video, I'm going to reveal the exact strategies, with real examples, that can turn the next crash into the biggest opportunity of your financial life. Point 1. Stay calm and don't panic sell. When a recession hits, the biggest mistake people make is panicking. Fear spreads like wildfire. Suddenly, millions are rushing to sell their investments at rock-bottom prices. And this emotional reaction? It destroys wealth. Take 2008, for example. Countless investors sold their stocks at massive losses, only to watch the market rebound within a few years. The S&P 500 fell nearly 57% from 2007 to 2009, but then climbed over 400% in the decade after. Those who stayed invested not only recovered, they built life-changing wealth. The solution is simple, yet powerful: discipline. Instead of reacting emotionally, focus on your long-term plan. History proves it. Markets always recover. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." That means holding steady when everyone else is panicking. Here's a practical tip. Write down your investment rules before a crisis. For example, I won't sell unless fundamentals collapse, or I'll only sell if I need the money in 3 years. Set the rules, reduce emotion, and let patience do the rest. Fear is temporary, but discipline? Discipline builds lasting wealth. Point 2. Look for undervalued blue-chip stocks. Recessions turn strong companies into bargain deals. During a crash, even giants like Microsoft, Apple, or Amazon can lose 30–50% of their value, not because the businesses are weak, but because panic drags everything down. In 2009, Amazon's stock fell under $80. Today, it trades above $3,000. Investors who recognized this value then became millionaires. The problem most people face is that they can't separate weak companies from strong ones. They fear buying during downturns. The solution is to focus on blue-chip stocks, large, financially stable companies with proven track records. These companies survive downturns because they have strong cash reserves, loyal customers, and global reach. Tools like Yahoo Finance or Morningstar can help you track financial health. Look for low debt to equity, consistent revenue, and long-term profitability. Remember, downturns don't destroy value, they temporarily disguise it. And when the world panics, that's when opportunity knocks. Point 3. Invest in index funds and ETFs. One of the safest ways to profit during a recession? Index funds and ETFs. Instead of betting on one company, you spread your money across hundreds of them. Take the S&P 500, for example. Even though it dropped during the 2008 crisis, it rebounded to record highs. Investors who stayed invested were rewarded handsomely. Many beginners chase individual stocks hoping for quick gains. That's risky during a crash. Index funds give automatic diversification. You don't have to guess the winners. History proves it. The overall market always recovers. John Bogle, the founder of Vanguard, created the first index fund in 1976. People laughed at the idea of average returns. Today, it's one of the most successful investment products ever. Even Warren Buffett recommends putting 90% of your money in an S&P 500 index fund. The key? Automate investments through low-cost index funds. Reinvest dividends and let time compound your wealth. Crashes become buying opportunities, not reasons to panic. Point 4. Focus on skills and side hustles. Recessions don't just threaten your investments. They can threaten your income. Layoffs rise, businesses cut staff, and suddenly, people find themselves without a job. Here's the secret. One of the smartest investments you can make during a downturn isn't in the stock market. It's in yourself. Learn a skill, start a side hustle, or build a digital business. During the COVID-19 pandemic, millions lost jobs overnight. But those who had side hustles, freelancing, e-commerce, or digital marketing, kept earning. Skills like coding, copywriting, and sales became survival tools. The problem? Most wait until disaster hits. The solution? Start today. Platforms like Upwork, Fiverr, Shopify, They allow you to earn even during global recessions. Real-world proof? Many YouTubers and online educators became millionaires during the pandemic, not because the economy was strong, but because they adapted. In downturns, companies cut costs but still need essential services. If you can provide them, you'll not just survive, you'll thrive. Point 5. Study the patterns of past recessions. Every recession feels unique, but history repeats itself. Markets crash, fear spreads, assets sell at discounts, and then recovery follows. The dot-com bubble of 2000 wiped out tech companies, yet gave rise to Google and Amazon. The 2008 crisis crushed banks, but created opportunities in real estate and tech. COVID-19 in 2020? Brutal, but the fastest recovery in history. The problem is, most people forget history. They think, this time it's different, and let fear blind them. The solution? Education. Study past market cycles, crashes, and recoveries. Recessions aren't the end. They're opportunities. Howard Marks, in Mastering the Market Cycle, explains how recognizing cycles is key to long-term success. He and other investors made fortunes by buying when fear peaked. Practical step. Keep a journal of past crashes. Watch documentaries. Read letters from Buffett, Marx, and Dalio. By learning from history, fear turns into confidence. Winners are those who act boldly when the future looks dark. Point 6. Invest in high-quality dividend stocks. The problem most investors face in a recession? Income stops, stocks fall, panic rises, and people lose trust. But dividend aristocrats, companies paying consistent dividends, keep cash flowing. During the 2008 crisis, Coca-Cola and Johnson & Johnson continued paying and even raised dividends. Investors who held on received cash flow and doubled wealth during recovery. Those who sold lost both capital and income. The solution? Focus on blue-chip dividend stocks, essential goods providers that survive recessions. Reinvest dividends automatically. Every share you buy at a discount grows into massive passive income. Practical step. Research. Dividend aristocrats. Use Seeking Alpha. And reinvest. Dividends keep money coming in, even when markets are chaotic. Point 7. Use precious metals as a hedge. Uncertainty makes people seek safety. Stocks can bleed, currencies fluctuate, but gold and silver remain valuable. In 2008, while markets collapsed, gold prices rose. In 2020, gold hit record highs over $2,000 an ounce. Ray Dalio repeatedly stresses owning gold as insurance. The solution? Allocate 5–10% of your portfolio to metals. Not to get rich fast, but to protect wealth. Practical step. Buy physical gold, silver, ETFs like GLD or SLV, or digital gold. During crashes, metals help you stay afloat when everything else is falling. Point 8. Seize real estate opportunities. Recessions create property bargains. Most see falling prices as danger, but smart investors see opportunity. Defaults, foreclosures, and stalled projects make property available at discounts. During 2008, houses in Nevada, Arizona, Florida dropped 50%. Investors who bought then doubled their money in the following decade. Buffett even said he'd buy hundreds of thousands of homes if possible. Solution: focus on distressed sales or REITs. Cash flow positive properties are key. You survive even if prices fall further. Practical step: use Zillow, Roofstock, or auctions. Invest in areas with strong rental demand. Cheap property during a recession can pay for life. Point 9. Invest in recession-proof businesses. Not all businesses die in a downturn. Some thrive. Discount retailers, fast food, healthcare, repair services. During 2008, McDonald's revenue grew while luxury restaurants struggled. Walmart and Dollar Tree boomed. Amazon thrived during the early 2000s dot-com crash by being cheapest and most convenient. Invest in essential service companies or start a business that solves real needs. Study consumer behavior. Essentials are always in demand. These businesses survive and even grow during downturns. Point 10. Keep cash for bargains. The biggest mistake during a recession? Not having cash ready. Most investors are fully invested when markets peak. And when prices crash, they can't buy. Cash is your secret weapon. It allows you to buy high-quality assets at rock-bottom prices while everyone else panics. Real example. During the 2008 crash, Apple stock traded near $12. Today, it's over 180. Those who had cash ready multiplied their wealth many times. Charlie Munger says, opportunities come rarely. When it rains gold, put out the bucket, not the thimble. Solution: always keep 10-20% of your portfolio in cash or liquid assets. Not lazy cash, but money ready to move when opportunity strikes. Practical step: park money in high-yield savings accounts or money market funds. Then, when fear grips the market, you can buy stocks, properties, or businesses at discounts. Cash gives you freedom and power when everyone else is paralyzed. Instead of begging for safety, you become the buyer everyone envies. Listen carefully. Every recession writes two stories. One story is of fear, panic, and regret. People selling everything, watching opportunities slip through their fingers, and years later asking, what if I had acted differently? The other story is of courage, preparation, and vision. People who saw the crash, stayed calm, and turned chaos into life-changing wealth. Here's the truth. The next crash won't wait for you to be ready. It's coming, whether you like it or not. And the question isn't if it will happen, it's whether you will be part of the winners or the losers. So I'm asking you right now, choose wisely. Will you sit back and watch history pass by? Or will you take control, apply these strategies, and use fear as your fuel? If this video gave you the insight to survive, thrive, and profit while others panic, hit that subscribe button, smash the like, and commit to your financial journey today. Because the clock is ticking, the next opportunity won't wait. Your financial freedom depends on the choices you make in the next 24 hours. Don't just watch this video, be the person who acts while others hesitate.